pensions is confusing for many, and so you're not alone if you are one of those individuals that just struggles to come to terms with what the benefits are and whether it's the right option for you. I get asked a lot of questions mainly around getting started with pensions. Is it the right options? What the benefits are? And so I thought I'd put a video together to just really answer all of those questions and give you an insight into what some of the benefits are. And it's according to Finders, there is no surprise 18.4 million Brits still don't have a pension or are unaware of what a pension actually is. So in this video, I'm going to give you 5 reasons why pensions should be part of your key planning for retirement. Welcome, my name is Makala Green. I am a financial expert, chartered financial planner, and welcome to my YouTube channel. This is the Wealth Check. The Wealth Check gives you the financial tips and tools you need to give you financial confidence and take control of your money. If you find value in this video, I'd like you to like and subscribe on the link below. So let's get into it. What is a pension? A pension is basically an investment pot that is specifically designed to provide an income for you when you retire. That's it. That's all it is. But pensions people seem to overcomplicate what an actual pension is and what it does. And that can really put you off from starting. And there's lots of myths out there around, am I too old? Am I too young to start a pension? I don't have enough money to start a pension. And the list goes on. But the truth is, it really doesn't matter how old you are, or what age you start, or the amount of money that you start with. The greatest thing is that you do start, because we're all guilty of not saving enough for our retirement. But if you start off earlier, you could end up with a much larger pension pot than putting it off for a number of the reasons that people do. And the downside of not adequately retiring with some form of pension or income in retirement means that you could end up outliving your savings, or worst of all, you could end up not being able to enjoy the lifestyle that you desire. So saving for a pension might be hard, but retiring without one is even harder. So let's get into it. 5 steps. Number 1, tax relief. Tax relief is basically free money that you get from the government that basically adds towards your contributions. So for every contribution you make, you get a bit of money from the government. And who doesn't like free money? So first of all, it's separated basically in your tax bracket. So if you are a basic rate taxpayer, you're entitled to 20% tax relief on your contributions. In figure terms, that basically means for every £100 that you contribute towards your pension, you will receive £20 tax relief. So physically, you're only contributing £80 towards the pension, but receiving £100 in the pot. Bargain. The higher your tax rate, the more tax relief you actually receive. So if you are a high rate taxpayer, you're entitled to 40% tax relief. And if you're an additional rate taxpayer, you're entitled to 45%. If you want to understand the details about tax brackets and what they are and what they're about, check on the link below. Step number 2. Employer benefits. Now, there is a thing that has been going around for quite some time now, auto-enrollment. This is basically a government-backed incentive, which is a legal requirement for all employers to make contributions to employees if they are eligible, which is basically contributing with them to their pension. So again, it's free money that you can't afford to give up. So you're actually, for every contribution that you make as an employee, you're getting a contribution from your employer, as well as the tax relief. Again, there are details about whether you do meet the eligibility criteria, but actually 86.4%, according to the Office of National Statistics, state that 86.4% of full-time employees are actually enrolled. So we're doing really well here, but a lot of people do opt out. And the good news is you can actually opt back in, and for all the right reasons, as I'm explaining here today. So with that, if you want to find out again a bit more details about how much benefit you will get or contribution towards your pension payments and the minimum standard guidelines, check the details and the links below. Step number 3, tax-free. Pensions are one of the most tax efficient vehicles that you can put your money into. While your money is actually invested, it is free from all taxes. And when I say taxes, I mean income tax, capital gains tax, and inheritance tax. Check the links below if you want to find out more details about those. Those are the benefits over when you compare a pension to an ISA, because an ISA is free from income tax and capital gains tax, but it's not actually exempt from inheritance tax. So it will actually form part of your estate in the event of a death, which is liable to tax if your amount of your estate is over a certain threshold. So with pensions, there's nothing to worry about. While the money is invested, it is sheltered from all of those. So it's a great way to actually build generational wealth, as well as making sure that you're not taxed on your income or any gains that you make over the longer term. Step number 4, pension freedoms. Now, pensions used to be known as these very restrictive, not so great, not flexible types of investments, and a lot has changed and gone into actually making it a platform and an investment that is worthwhile and that works for you, because really you spend so many years investing into a pension. You want to make sure when the time comes that you're ready to actually use the money, that you can use it in a way that you want to. So there's a huge variety and ways that you can actually access your money. I'm not going to be discussing them in this video today. I'll possibly do another video where I'll explain a bit about the different ways that you can take your pension, but I really want to focus on really getting started on what the benefits are. So you do have options, they are flexible. You can find an option to basically suit you, one where you can even take all of the money as a lump sum, which is generally not advisable, but it's an option still available. So it's worthwhile considering. One of the great things about having the pension freedoms, it means that you can have more control of the income that you receive in retirement. And quite unlike any other type of investment, a pension allows you to take the money as and when you need it, once it's accessible. So that way, and take an amount also that is suitable to you. So that way you can control your tax. You might be this retired person who is semi-retired. You want to continue working, and therefore you don't want to take a full income from your pension, and you have the flexibility to control that with the pension freedoms that are now available. And last but not least, number 5, tax-free cash. Now, again, unlike any other investment that you put your money into, a pension gives you 25% tax-free when you're taking your money out. So on the way in, remember I stated step number 1, you have the tax relief, which is free money from the government that actually contributes towards your pension contributions. But on the way out, you also get 0.25% of the pie, basically tax-free. So you don't have to worry about any taxes or self-assessment returns for the 25% that you're allowed to take. So if you've built up a pot of 100,000, you know, that's £25,000 that you can take tax-free. If you've built up a pot of £1 million, that's £250,000 that you can take tax-free. So it's really dependent on what you basically put in. Now, these are the percentages for most pensions. If you have a really old pension, you could be eligible for higher percentages, but then not much of them are around anymore, and so we'll stick with the bog standard, which is 25%. And again, it's a great opportunity for you to build wealth over your longer term, control your taxes, and find ways to actually have different revenues and streams of income. So there are many other streams of income that you can produce in retirement, such as, you know, a property or a business, but they all likely would be subject to tax in some form, unlike the pension that is tax-free while held within the fund. And none of them give you that opportunity to take 1/4% of your investment tax-free. So there are a few 5 steps that really should encourage you to, if you haven't, get started with a pension. If you've already invested into a pension, potentially invest a bit more or contribute more. And basically, if you really hate pensions, maybe consider that it might be an option for you, if not now, then at some point in the future. So that's me, that's a wrap. Again, as mentioned, if you like the video and you found value, I would say like and subscribe. And also, if you have any comments, let me know what your thoughts are around pensions and what you think, and whether you've started a pension or whether you're thinking about starting a pension. I'm happy to have discussions around that. I look forward to hearing your views, and I look forward to seeing you next time. Take care.